Good morning, everybody. Welcome to the Flow Show. It's Tuesday and a lovely, wet and windy one from here in the south of the UK. Spent most of the night awake. It sounded like people throwing pebble dashing at my windows all night. So, and a lot of fun. Morning, Stel. Morning, Kay.
Morning. I spent most of the night awake as well, but because I had this very sore throat.
Oh,
You
dear.
can probably hear it, right?
Not the dreaded lurgy, I hope.
Sorry, not the what?
Not the dreaded lurgy.
What's a lurgy?
COVID.
Oh, no. We with all this stuff happening, we've forgotten that there's a million other viruses out there, right? Anyway, not feeling great past couple of days, but it's okay.
Yeah, same here. I got double tapped last night as well. Went for the old flu jab, family outing to the doctors, and the doctor went, "Oh, you're due your COVID as well, so might as well get that done." Thanks, cheers. One in each arm, then. Thank you very much.
Nice.
Hey, you all right, mate?
Yeah, I'm good. Well, actually, I've got my double stabbing on Friday, and I took them both in my left arm because I'm right-handed, and I was a bit worried that one of them would spoil my right arm a bit.
One of them would stop working.
One of them would fall off.
It's kind of okay, bit stiff. I actually did feel tired after them. After the double stab on Friday and Saturday, didn't feel a lot of energy, but yeah, only lasted for like 24 hours, 36 hours.
Yeah, about the same. I think I'm going to hit the wall a bit later today, so I might have to go for a cheeky power nap or something.
Yeah.
See, lots of stuff to go on with today, which we will get right into it now. Not a lot of headlines out overnight from China, but we did have a bit of data out. Oh, where am I going? All over the place. Let me just check back. I think there might have been something late last night out of Japan. Yeah, so GDP out of Japan, a little bit softer than expected, coming in minus 0.3% versus plus 0.3% prior. Year on year, down 1.2%. Which looks a bit strange because we've seen a fair bit of the data looking okay the last couple of months or so. So maybe a bit of a surprise there. Whether we're going to see that improve in the revisions, but as you can see there, capex not as high as expected. So not quite firing on all cylinders just yet. In Japan, as far as the Q3 data goes anyway. It's a bit old hat now anyway, as GDP data tends to be. Over in China, we had some industrial production numbers, investment numbers. On the whole, not too bad. Year-on-year industrial production, 5%, year-to-date, 4%. Retail sales, a little bit soft there, minus 0.5%. Probably a little bit reflective of worries over lockdowns and things like that, and the general weight on the economy. Unemployment rate unchanged there. The part of the investment stuff that had there, one of the numbers I picked out was that property investment. This is a sector that obviously had a lot of media focus. Indeed, they may step in to help prop it up or support it in China. Year on year, the property investment was down 8.8%, beating or worse than expectations of minus 8.3. The last number was minus 8%. So that gives you a sense of at least some of the negativity in the property market over there. Back over to Japan, industrial production, again missing by a little bit worse, minus 1.7% there. Capacity utilization down as well. So it looks like potentially in the manufacturing area at least, it's not running that hot. We have seen a bit of one of these divisions between the services side and the manufacturing side. So we could be developing a bit of that there. Also, we had that. Here's the funny thing now that shows that Japan is coming through the COVID blip, if you like, or finally coming out of their COVID situation. They're going to resume accepting cruise ships. And this comes as COVID cases exceed 100,000 for the first time in 2 months. So easing of measures there, or looking to reopen and get back to normal there, even as COVID cases are rising. And pretty much getting on board with what a lot of countries are doing now, which is like the UK, Europe is just pretty much getting on with it now, taking it as part of life now. China is obviously waiting to play catch up to that effect there. The RBA were out with their minutes. Again, bit of a look back, rearview mirror stuff, but they did consider a 50 pip hike at the last meeting, but decided to go with a 25. The minutes show they don't rule out a return to 50 pip hikes, and as we know, they expect to hike further. Sticking with this, the central bank mob, we had a few speakers out yesterday. Over in Switzerland, we were speaking about this yesterday, how we thought he'd turned a bit more hawkish or stronger rhetoric than previously. So he was speaking again, S&B's Jordan was speaking again yesterday. They're ready to act to strengthen or weaken the Swiss franc if need be. Higher unemployment will not prevent rate hikes, and he sees inflation is becoming a lot broader, and there's a great probability they will need to tighten further. Now I looked at the rate odds this morning, and we're pricing 50 and 25 basis points. 50 pip hike is 78%, 25 pips is the balance, 22%. Now they started off their hike cycle with a 50, then jumped to 75 at the last meeting. So now the market is expecting and pricing in a 50 at this meeting. Now Jordan says they could hike in December. Depends on the data, but I'm thinking that we potentially might be on for another 75, given how strong he's talking about things at the moment. You know, inflation, rate hikes, that sort of thing, and the language, just in my opinion, suggests that maybe we should be thinking 75 50s rather than 50s 25s. What do you make of that, guys? Kay, still?
Yeah, I'm totally with you, especially that the S&B only has quarterly meetings, and we are now getting a bit closer to the next one, which is the 15th of this, just 1 month away.
Yeah.
So we already had nearly 2 months since the last one. But since it looks as if they won't do one in between meetings, I think the chances are really there that we are in for another catch-up move, and we see a bigger hike from the S&B. I'm totally in agreement there.
Yeah.
Yeah, same here, mate. I don't have anything else to add. I agree.
No. So it's hard to say, because in normal times, if we were expecting a bigger hike than expected, you might be able to trade it, but I'm not sure what we're going to be able to do given the situation. We'll have to see where we are at the time, what the market's doing. If we feel a 75 pip is the bigger opportunity, that might be that we can set up for a trade in that near the time. It's going to be a big week that week of the 15th. All those days, because I think that's the week we've got pretty much all the major central banks finishing off. Yeah, so hopefully they'll be done before our party on the 16th, Kay.
Well, yeah, the only one left after those is the Bank of Japan on the 20th. So
nah, that's Christmas then. We'll be gone. We'll be at the pub.
That's a Christmas central bank meeting with Sake-san.
Yeah, that probably the one where they actually change their tune and pull something out of the hat.
Perhaps.
No doubt. But yeah, anyway, don't spoil our Christmas. And speaking of spoilers, Fed Brainard was out yesterday, and a few of us in the chat room were looking at this one to see whether she was going to go against the rhetoric seen in the markets, this soft dollar, soft yields now, maybe keep the Fed message pumped up on their hike path. But she was very fluffy and really not hawkish at all. I'm not going to say she was dovish, because there's a difference between not being hawkish and being dovish. She was pretty fluffy on the CPI report. You know, said it was reassuring, primarily, no, I knew I was going to get this wrong. Preliminarily, it was reassuring, the CPI data. Said it was I'm losing my words already now. Appropriate soon to move to a slower pace of hikes. But exactly what the rate path looks like is difficult to see right now. So not willing to reinforce the path of rates in ceiling terms, at least. A bit unsure, nothing really strong out of her, and the market took that a bit weak, and we saw the dollar getting a little bit sold off again yesterday. Not too great. We're seeing different moves this morning, but that was one of the major Fed heads coming out with that. Over to the ECB, Villeroy saying that jumbo hikes won't become a new habit. He's been pretty much marching to that tune for a while now. It still puts the December meeting in question. Market leaning around a 50 pip hike. Might they go 75? Who knows? We're going to be jumbling around that decision into December, watching the data as always. Over to the UK, Sunak is saying he may, or reports are saying that he may raise the minimum wage. That'll be a bit of a vote move there. Also, not to ignore the inflation impact for that. On the other side, and we're going to get a lot of these headlines probably into Thursday's autumn statement, the budget statement. Chancellor Hunt is potentially looking for windfall tax on electric generators. That was something they were potentially going to hold off on. Now it might become a bit more closer. We've had some data in the UK, jobs numbers, excuse me. Bit of a mixed report. We saw claims rising, claimant count there 3.3k, not as much as expected. Did see the rolling 3-month employment change dropping more than expected. Unemployment rate was up a pip. On the wages front, they came in much stronger. 6% versus 5.9 expected, but not beating the prior month, 6.1. Taking out the bonuses did come in stronger, 5.7%, up 2 pips over expectations and prior. So wages bubbling for the UK, obviously still below inflation. We've still got strikes happening. We've still got pay negotiations going on. That isn't going to stop anytime soon. So I'm going to expect these wages to start perhaps staying on that upward trend, getting closer maybe to inflation. Obviously, if inflation keeps rocketing up, then they've got a lot of work to do. But it's a bit of an infinity loop. As wages rise, it feeds into inflation. Inflation goes higher. So that's one of the issues with the UK, is that it has a real penchant for feeding its own inflation. So that's why the Bank of England is often forced to chase with rates higher than what a lot of central banks have to do, because they really are pretty powerless to contain inflation. So keep an eye on the wage numbers, particularly there in the UK, with regards to what may happen for inflation. We did get some inflation numbers out from some of the Eurozone. France, CPI came in there 6.2%, so a rise over 5.6% last month, but not as much as what expected at 7.1%. The HICP, again, another big move up, 7.1% versus 6.2 prior. So no let up there. Spain as well, they were one of the ones who were really hot, and they're seeing inflation continuing to come off a bit, dropping to 7.3% versus 8.9% prior in the CPI number. In the Eurozone measure, that's a huge move. Inflation, a big move inflation in normal times is 3 pips. Here we're seeing 160 point moves in inflation. It's crazy stuff. But as I say, they're one country that inflation is seemingly trending lower. Not that you'd know it from what's happening in the euro. That's all I've really got on the headline front. Oh, let's just quick look at the zoo there. Much better than expected, or rather less crappy than it was before. Quite a decent jump to minus 36.7 on the sentiment. Current conditions improving a little bit there too, and some Eurozone unemployment numbers there. GDP pretty much there or thereabouts. I think that's a revision on the Eurozone GDP, is it, or is it preliminary? I can't remember.
Someone
either way,
preliminary, but I really don't know.
No, we've had all the main Eurozone numbers out anyway, so it's just the knock up of everything else there anyway. And on that front, yeah, guys, you got any headlines or bits you want to add into the mix?
Not really. Just one thing to point out again, the UK average earnings, 6% year on year. As long as we're seeing, this is for like the bigger picture, okay? As long as we're seeing earnings increase at pretty decent pace. Obviously, it's lagging inflation by quite a bit, but earnings are increasing. So it's going to be difficult to see inflation come back down sharply and quickly and settle back down to 1-2% simply because we do have earnings that have been following, but we and the Bank of England does look at the spread between these two numbers, so inflation and earnings, because it's the pinch or lack thereof onto the average consumer. So yeah, just something to keep in mind. I know people look at unemployment and all that and focus on that, but for me, this spread is something that's very, very important, both in real world, in the real world, but also because of the Bank of England that keeps focusing on that. They've told us many times in the past, and we do have the inflation report, right? When is that? Is this? Hold on, inflation report.
No, we had that. We had that.
We had that.
November. Oh. Yeah, that was last week.
Oh, you're right. It was last week. Yeah, sorry.
Yeah, we don't get one until January now. So yeah, December meeting is just a straight up rate meeting. Yeah.
I'm seeing tomorrow. I'm seeing CPI numbers in the UK.
Yep. No, I was talking about the inflation report, but that's always in November, February, May, August. But we had that last week, didn't we? Yeah. Okay.
Yeah, monetary policy report. Just in case people are unsure what we're talking about. Yeah, definitely. Okay, you got any other bits and bobs you want to throw in?
No, mate. Very strong move to this morning again in the dollar. I thought it looks to me like a delayed move on Brainerd perhaps last night. But if we look at euro crosses and yen crosses, apart from them against each other, right? It looks to be a bit the same as what we saw end of last week. The revenge of the low yielders. There's been a decent cut in the EU versus dollar differentials this morning. Also, the US 10s are moving below the 50 DMA. I'll show it a little later. Now it's a bit. I fail to see a headline reason for the dollar coming off this morning, but it does feel like somewhere waiting for a bit of a correction and then do another leg. That's how it feels like. And this afternoon we have PPI. Perhaps a bit of it is already front running the PPIs this afternoon, thinking that will come off again and weigh a bit more on the upcoming CPI data. So I guess the PPI this afternoon has the power of shake things around a little bit as well. But first, no, I've got really nothing much to add. I agree with Stel as well on those wage things that'll keep CPI probably underpinned for a while. That's about it on anything. And I didn't see much. The rest is just opinion pieces. Banks are starting to the Squid is starting to say that they expect CPI to come down quite a bit next year, and they probably have their suit of followers jumping on the back of that.
Yeah, and bank forecasts are like the weather, if you ask my opinion.
Yeah, exactly.
They like to make a big song and dance about it, but if their bank forecasts were worth the paper they were written on, they'd stick to them in the first instance, and you wouldn't get updates every other month. But there we go. That is the business. Yeah, just looking around some of the pairs, we are seeing fresh highs in euro, cable, Aussie dollar. So this dollar sell-off is continuing, but one place it's not quite continuing yet is in dollar yen. We may be on the way there. It's going to be an interesting watch to find out if we're going to move back down towards these lows. When we get big moves, and I've spoken about this before, when we get big moves, you know, all the way from 146 all the way to 138, your tech goes out the window. So sometimes you just got to let the market do its thing and set up where it wants to park the buses at. One of those buses is parked at that 138, 40, 50 area. Another bus is parked into this 140, 60, 70 area. So that's what I'm going to be looking for this pair. If we get a move down to 138, 40, 50, if we hold, that's going to tell us something. It's going to say that that's where sellers are running out of puff, and that's where the buyers want to come in and pick it up. If we make a new low, even by a few pips, 138.30, that gives us the indication that we're not done here. That's the story that we're getting in euro dollar. We got through this zone in the end, and really it hasn't looked back, and it's going to keep going. 115 is going to be the big level up here. We've all been speaking about this for quite some time. It was a big level on the way down. It's going to be a big enough level on the way up, being no doubt. Speaking of moving averages, you can see we're pretty much bang on the 100 DMA there. Sorry, 200 DMA there. So another one coming into the resistance mix, but really for me, it's all going to be about 115. And then
are you on the euro dollar?
Yes, mate.
About 115.
105. Sorry, 105.
Okay.
115. 115 was another level way back when. As you can see that there. See, plays on the mind. 105. Get the numbers right, Ryan. Yeah, so that's the big level, 105. As mentioned, we've been speaking about that for quite some time. Cable as well was looking like it was holding the 1840s area for quite a while. Similar to, again, what I was looking for. Are we going to get a sustained period of finding resistance on the level? The answer to that is no. We're breaking to fresh highs, and so we're up above a fairly decent fib there. Just zoom that out again. So that's coming in from the 2021 highs. So just nicking above that fib at the moment. Signs that the trend is really possibly going to change when we start looking at these fibs. 120 is going to be the big psychological level, going to be a bit of a technical level on its own as well. If we get a look up there, is it going to be another stretch point, a temporary pause, or are we going to just blast through it and continue on higher? So Kay was talking about mentioning the yields. I'm looking at that this morning myself. The 2-year, which is pretty much, you know, the go-to for the rate ceiling. And in my opinion, while we're staying above, you know, 4.25, but below 4.755, we're still in the Fed's rate ceiling, the dot plot. Let's call it that. You know, expected to have a rate ceiling, you know, somewhere 4.5, maybe up to 5%. If we start breaking down in twos, that's really going to show that the market is changing its mind over how high Fed rates are going to go. So that's my short-term marker for judging the rate ceiling. But that doesn't mean that the rest of the curve isn't moving. As mentioned, as Kay mentioned, 10 years. Right on the lows. Similar picture to what we're looking at in dollar yen. You know, we had the bounce off these lows here, then it finds a bit of a ceiling, 3.9%. Can't get above there. What does it do down here? If it breaks, you're likely to see dollar yen then continue on to the lows, and we'll see what happens down there. But at the moment, it's holding the prior lows. So on a technical basis, and possibly for dollar yen particularly, that's going to stop it from falling much further. But you look further out and 20s are making new lows, 30s are making new lows. But the fact that dollar yen isn't really following those two closely shows you what it's following. So keep an eye on that 10-year yield, particularly if you're watching dollar yen, because that's going to be probably the maker or breaker of it for that. Kay, do you want to have a quick look around before?
Yeah, I mean, unless Stelios wants to look at something, I can do an on-request one, or Stelios can take the screen if he likes.
Whatever you guys want.
All right,
I
go for
don't
it,
have
man.
I don't have that much to say today, so
Okay.
perhaps I do that tomorrow. What do you
Okay,
guys think?
good. All right, then.
Hopefully after the PPI, maybe we get some things.
Oh, you want to give it a head start, do you?
Okay, Harry. Okay, Harry. Harry Hindsight wants to talk once the movie's done. All righty. Yeah. So this is what I was looking at this morning, and Ryan already showed. We're not making new lows yet, but we are trying to break through the 50 DMA, which held so far on 2 occasions in the US 10s. Not going to spend too much time on it, but yeah, basically 380 is where it's playing ball or not, and we'll likely see dollar yen move on any of those moves, whether it's up or down. 2 years done, the rest as well. Do a quick look on this euro dollar. Yeah, Ryan is talking about the 105, which is around here. It's the 50% of the 115, 90.95 move. That's waiting around in the 105. But this 103.5070 that we have been talking about a lot of times. Yesterday it capped again, and this morning, for very little apparent reason, we just woke up and flew through it. So this is going to be the zone where it now has to hold. Call it, give it 20 points, 50, 70, 45, 65. It's all a bit relative, but at least the 103.5 is going to be the important one now on the euro dollar, whether it holds or not. If it does, we can have a look at those 105s. The picture though has changed quite a bit in just a few sessions. If we look at the height of the channel, 101, 95.40, how much is that? 550 points added on to, well, here we go, 104, where we are now, could be the channel move target. So we got to keep a bit of an eye on what the euro dollar does here. I've had just a quick little few nibbles at it, but I don't really know, barring the euro data not really falling out of bed. I don't really know what justifies really this move this morning, unless it's a delayed Brainard move. It looks to me like some bigger accounts have been toying around in the markets of late, and we also seeing it on the crosses. If you look at euro yen, for instance, is also trying to hold, but perhaps the yen is not the best thing to show, but the one that is really that has seen like a couple of legs of really strong abandon the carry ship, and we are seeing another one this morning is Euro Mex. We've got again up to 2020s, and that's what we are seeing. If you look at the Euro Mex, the Euro China, the Euro Rand over the past couple of sessions, they've all been ramping higher, and we can see the same thing in Mex yen, likely Rand yen as well. It's all, the market is shifting their carry trades, right? They're getting out and letting it get back to a bit of a level, let it sweat a bit, and then they're coming back into the market. And I reckon that's what we're in, this process of getting out of carry trades now. What the next run is going to be, I really don't know. But if the PPI data show weakening this afternoon, we may see another round of this thing happening. Another one that I like to show this time again is we had a delayed reaction on the dollar max. It didn't move didn't really move a lot. I need to go a shorter time period. It didn't really move a lot on Banxico. Even went back up a little bit, and then we had this sharp move lower yesterday into our morning. And this move, I think, is really linked to those euro and yen carry trades getting out. I wouldn't read too much about on it. Keep an eye on 1940, 1942 dollar mix, and then the higher zone where we stopped before, the red line, 1965. If you wanna stay in it. What else? Yeah, I want to show you the antipodians this morning. We're on resistance here in all things Aussie and Kiwi. Aussie is breaking the trend line, and that comes in around 67.5. But we still have a double fib layer here waiting at 67.70. So this 50.70 zone, I think, is going to be important for the close tonight. Stay above. There's going to be a possibility of going back right up to the 69s, in my opinion. Fail, and it may be telling us that the dollar has ran its correction, or at least pausing the correction right now, and not excluded to get a look back into the mid to low 66s. I'm seeing a bit of similar happening in the Kiwi. We're having this horizontal resistance here, prior bottoms and tops around 61.55, 60, and we are right on it. So that to me is going to be the level that I'm watching right now. As people know in the in our chat room, I've bought a few again earlier this morning. Already traded it around in front of this level, but this is going to be my marker for later on. If it breaks and holds 62.35, 62.65 is going to be another bit of a target zone. You can see this move here. It's quite a nice how shall I say, traffic zone here. So there may be a push higher here, but then ready for a pause perhaps. What else? I'm a bit I'm not really looking at stuff like Euro Kiwi, Euro Aussie, because they are, if not they are if volatile, they are not going anywhere fast now. They're just volatile in a range. We'll be looking at those ones a little bit later on. Any questions? Would a weaker Dixie not increase inflation? Well, as we have seen so many times, oh, Ryan already replied to it, but as we've heard many times about the ECB as well, they are saying that lower euro is not helping to combat inflation, and that's what the higher dollar has done. So it helped to soften the blow from inflation. But we have to also bear in mind that I think it needs a 10% move in the currency to have an impact of around, is it 1% or so? I don't know. Perhaps Stel can correct me if I'm wrong. Is it like a 10% move in a currency is about a 1% equivalent in CPI or so? Or less?
I think Jackie said 0.4%.
0.4.
Yeah.
10% move in the currency is 0.4% in inflation terms.
Yeah, so it's even less. So don't overestimate currency impacts when we talk about inflation either. Lastly, quick look at the silver. I've got a bit of a zone here which I talked about in this 22.25, 22.35 on silver, and we failed on it. And as we have seen when the move started, the metals have shown us the way. And I'm starting to wonder, because this is a daily, and the daily is starting to paint a little bit red on silver. So I'm starting to wonder if FX will, at the end of the day, perhaps take notice of it. But if I look at the 10s right now, they are trying to break under 380. So
yeah, and if you look at platinum and palladium, they're doing really well today. Just silver underperforming, and I think you're right. It's that kind of technical area. Plus, I still think there's profit taking because it was the best performing of them all last week. So I think it's a bit of a hurdle. As long as yields don't start going rapidly higher, as long as the dollar doesn't start rallying strong, I think we're gonna go above. But at the moment, you're right. It's hesitating.
I think so too, and I'd like to see a little move back down to 21.5 to
yeah, that would be actually not a bad, retest and then go.
Yeah.
Nothing goes in a straight line, right?
No, absolutely not. I've been messing around with it this morning as well, so just trying to improve my averages.
Nothing goes in a straight line apart from FTX and their token.
Oh yeah, okay. and I don't know. There's about $34,000 ones going the same way as well, right? Gold, Ryan already spoke about. Still in the position. Well, really well done on that one, Ryan.
Thanks, mate.
I think we're starting to have to look at the 1800 again, right? There's 1790s, and this one is the 200 DMA. Yeah, 200 DMA 1803. It's been a big traffic zone. So if ever we see this push up to the 1800, I'd say respect it. I'd really say respect it and see what happens around there. I'm not going to take much more of your time today unless somebody wants to look at something in particular. But I don't see much other, right? It's a dollar move, right? It's really a dollar move. Dollar yen, perhaps, quick look. But Ryan also already spoke about that one. I think it's really the prior lows here. There is a level. It's the 61.8 around 130 at 60. We went for a bit of stops below 61.8 of the 130 150s rally. And then yesterday we went back up and failed around this first retracement or correction inside the correction level. But really, it's all about what's happening in the US yields for the dollar yen from here. Anything else?
Yeah, no, those 10s are just nicking under
3.8%. Exactly.
So that's why dollar yen's testing the handle, 139 handle.
Yeah, but funny enough is that this time the metals are not really following, so they are in take profit territory right now. So I'm not sure if the rest is going to do a fakie or just follow, because just looking sideways to the commodity currencies or the antipodians, and they are still respecting those levels as well right here and now. So could be a bit of a fakie under 380. I'm giving it back to you, Ryan. I really don't have anything else to show today.
Yeah, no problem, mate. I'll take that. I was going to have a look at the Aussie dollar as well.
I'm going to leave you to it, guys. And thanks, Ryan. Thanks, Stelios. I need to hop for a little bit. Thanks, everybody. Have a safe day.
Thanks, Kay.
Thanks for your company.
Yeah, see you in a bit, mate.
Cheers, mate.
Yeah, so Aussie dollar, obviously been long off down at the lows here. So this has been sailing very nicely. Got above the 38.2 fib of the year high low. We've got a bigger fib coming up in the 68s, and we're going to hit plenty of traffic probably from 68.50 probably all the way through to 69. So this is going to be a big traffic zone to get through here. From here, no doubt we're going to run into some resistance, big figure resistance, 68 handle. I did put in the room earlier this morning that 67, 60, 70 is a bit of a resistance area. The high so far is 69. So we're banging our head a bit there. But if we get through that, then I'm expecting a move up to at least 68. Excuse me, and that's where I'm looking to take a bit more profit on my longs from down here. I'm a bit disappointed I didn't really get to add to the break. I did try a break here the first time it happened, and then that got knocked out, and I didn't get back in it again. And it's really been a one-way street. But I'm not going to complain, seeing as I'm low from all the long from all the way down here. Another one that those of you who've been following the show for a while might have seen. I was talking about this trade, dollar Hong Kong up against the band. The HKMA, the Hong Kong Monetary Authority, effectively the central bank, runs a tight band in this one between 7.75 and 7.85. And I was layering shorts up into here. Pretty much because the central bank has got my back. Obviously, never say never. Those of you who remember the stuff from the SMB, but in these terms, they've reaffirmed the peg. So sitting up in shorts on this one and waiting, is, in my opinion, was a very low risk trade. I have knocked some out. I got some off 74.50. I was playing a bit of a 74.50 up to the band while it was doing nothing. Got a bit off 73.60s, waiting for a move through 7.82 to take a bit more off and then start bringing my stops down. But as I said, this was a bit of a low risk trade in my opinion, and all of a sudden with the dollar move, it's starting to take shape. Dollar one, another one. I did take a little bit of a long yesterday on ahead of Brainard, only a small one because I thought she may be a bit more hawkish than she actually was. That hasn't worked. So what I'm going to do with this one is play it down to the 7 handle. That's likely to be a decent area there to focus on. Always a big psychological level. We have had a low down towards the 7, just under 702s. So that's going to be a bit of a marker. So I'm long 706.60, sorry, 70 and 704. I'm going to bid a bit more up at 702 and see what we do. Maybe we find a bit of support into the 7 handle down here. I know Kay's looking at this one as well. So plenty in the mixer. If you've got any pairs you want us to have a look at, then obviously please throw it up in the comments there. Please don't just throw up, look at XYZ. Give us a bit of insight. What are you looking at? Are you long? Are you short? I know some of you guys were playing Guppy the other week very successfully. So give us an idea what you want to chat about. Your Kiwi CAD long, Surab. Okay, let's have a quick look at that. Kiwi CAD. Oh, blimey, that's not one I look at. I'm going to see if I've got your list. Is that one of your favourites, Stel?
Never ever traded it in my life. Oh wow.
Yeah, that's pretty much looking the same picture as Kiwi and Aussie dollar. Yeah, so very nice. So you're long in that one. You're long from way down below, I hope. Looking for a break or looking for a move at least up to this. Looking like a decent double top, only 250s, 70s perhaps. That'll be a nice trade for you. So if you're long from down below, very well done. Going on quick look at what's coming up today, because we do have some important data today. 2 things of note. Firstly, Empire State Manufacturing. This is the first manufacturing number for November from the US. So it's always seen as a bit of a bellwether. The second piece of data comes later from the Philly Fed, I think on Thursday. But this will get the ball rolling for manufacturing. And as we've seen from the ISMs, the PMIs, things are looking soft. So we'll keep an eye on this one to see if that trend is going to continue. But really, PPI is going to take a lot of the market focus for its inflationary purposes. There's going to be a lot of eyes on it. I'm not sure if we're going to get too big a reaction to it unless there is a huge variation in the moves. PPI does lag CPI. and it hasn't been as volatile even as CPI has been. So if we're getting numbers around the 8% mark for PPI, around the 7s for the core number, that may stop some of this dollar sell-off, because it will show that PPI is perhaps not falling as much as CPI is. But this can be a very volatile data point. There's much more that goes into the mix here than CPI, because it's all the producer side, has a lot more to do with imports and that sort of thing. So keep an eye on that data. Of course, if we get big misses here, if we get PPI coming in marked lower, I think we could well get another leg lower in yields and the dollar, as the bears and the doves reinforce and the pivoters reinforce the push that they've had for now. They're in the driving seat. It's going to take a lot to turn it around. I still think the big risk is that we get the big man Powell coming out with something. If these moves start to get a bit too far, he won't want to let the market undo a lot of their tightening work just from a change of sentiment. A lot of the Fed's action is in sentiment. Market expecting rates to go higher. That automatically tightens conditions. But if that all becomes undone just on market moves, I think it's still a big risk he comes in and puts a halt to it. So keep an eye out. You never know when someone like that may pop up. Apart from that, let's have a look. Any more questions? EU and UK gas prices up 12 and 14% today. Yeah, and we've seen the TTF has been on an absolute slide of late, one of the markers to look at for European gas prices. We obviously have got this cap in play in the UK. Prices are due to rise, were due to rise in January again. We need to see what happens with that. Is the cap going to be adjusted, or, you know, I don't know what this government are going to do with it. It's going to keep inflation coming. Certainly, we're not out the woods as far as energy pricing is concerned. Yes, Europe may be covered for storage for the winter, but they're still working on next year, and they're still going to have to pay up for it. So keep an eye on the data today. Could be a bit hot for the dollar in particular. Keep an eye on those yields. Let's just have a flick back, see what those 10s are doing. If it does get a proper move through here, you know, we could be heading down to 3.6, 3.5%. You know, a big level down here. We shall see what happens with that. I don't have much to add on top of that, really. Bit of management going on today. So if you want to check out our chat room, of course, please do so. I will pop the link in the chat room for you. The prices did go up, but you can grab a 20% discount for the lifetime of your subscription if you follow the link when it comes up. There we go. On the Forex Flow site there. I'll put that in the link for you there. So please come and take a look. I think you can still take, you still get a 10 days for $1. Still?
Yes, yes, it's still on.
You can
yes.
take that, come and give us a trial, and then take advantage of the discount there. And you can also come and see who's going to win our World Cup competition that we've got going.
Yeah. Thank you, Ryan.
Yeah, I managed to do a bit of horse trading. I got allocated Australia, and I managed to swap it for England. I don't know if that's out the frying pan into the fire, but we'll see next week. And bear in mind, next week the World Cup starts. If you're not a sports fan, that doesn't matter, because markets will die when there's decent football games on. So I expect that to happen as well. Monday's a big day, England's first game, 1 PM kickoff. So you might find liquidity drying up a bit. Certainly, I might have to make an excuse and be a bit sick for the face show Monday still. Okay, well, we'll leave it there. Thank you very much, boys and girls. Have a good day, and we shall pick it up again tomorrow. See you later. Thanks, Dale.
Yes, cheers, Ryan. Sorry, I had to step off for a few seconds. I don't know if you called on me, but anyway.
No, I said I might be a bit ill at 1 o'clock on Monday. Went for the start of face because
yeah, okay. All right, man.
Cheers, guys. Thank you, everyone.
Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.